Welcome to the Seatrade Maritime Podcast. I'd like to move on to look at the dry bulk market with views from Will Fray. Will, welcome back to the podcast.
Thank you, Marcus. Nice to speak to you again.
Now, looking at dry bulk shipping market, Q4 of 2024 was not particularly good. Sort of what happened there and where are we headed as we now move into 2025?
Well, I think it's probably helpful to look a bit further back in 2024 to make it clear that actually, I guess in a similar way to the container market, actually it was a very positive year, unexpectedly so, really. There are two major factors supporting the market, one of which was China's stockpiling, a lot of iron ore and coal. And the second factor, which we touched on several times, is also these inefficiencies. And we've talked about the Suez Canal, but also the Panama Canal at the start of the year had very low throughput. So these factors really helped the dry bulk market during a period where actually the underlying sort of economic fundamentals of trade, and in particular for China, which is the key support for dry bulk, were really quite weak. And China is clearly still struggling with some very under performance of the construction sector, particularly related to residential construction, and that's something that continues at the moment. I think it's worthwhile putting this sort of stockpiling into perspective. So there was growth of 165 million tonnes of cargo in 2024, estimated by MSI, whereas China's stocks of coal increased by 100 million tonnes and iron ore by 30 million tonnes. So these sort of significant imports then by China are partly used to build up those stockpiles in the face of very sort of weak underlying consumption. So I think the point is that when we're then heading towards the end of the year in 2024, what's changing? And I think one factor is really we shouldn't lose sight of the fact that there was 33 million deadweight of new ships delivered. So what we're starting to see then is actually the supply growth starting to now absorb all of that incremental demand from really those two major sources. Now, sort of looking through to 2025, then is this kind of supply growth then going to start to impact the market through 2025? This is where we are getting slightly more cautious. I think overall, there is little to suggest that there's going to be much of a recovery in the underlying fundamentals in China, although potentially stimulus measures may have some impact, which we can talk about shortly. But as with containers, if there's no kind of significant incremental change again in additional inefficiencies, then the market's going to really quite struggle to absorb this 36 million deadweight of new ships that are scheduled to be delivered in 2025. Through our modelling, we can actually put a sort of number on that, and we estimate that the sort of tons of cargo that would be required to absorb that amount of new ships. And that points to 240 million tons of incremental cargo required in 2025 to absorb these new ships being delivered. And I think that's really a tall order for the dry bulk sector.
Yeah, that is a very interesting number, that 240 million tons. It's a sort of major amount of additional cargo that has to be found. There's been quite a lot of talk about Chinese stimulus and so forth and new measures on that front. Would that help to sort of fill that gap that you just talked about there?
Yeah, it's a really, obviously, it's a point that's been talked through all through 2024 as well, with this underlying weakness in the Chinese steel markets, in the construction markets, is where is this stimulus? What's happening, and at what point will it start to make a difference to the market? And I think, in general, those stimulus measures that the government took through 2024 hadn't really changed the underlying consumption of raw dry bulk materials. So the thing with China is obviously there's always massive potential for big change, and there is something they could do in 2025 to help support the underlying steel consumption. And I think we'd all agree that it will improve at some time, and stimulus measures will be part of that picture. The issue that MSI likes to raise is that the Chinese sort of the structure of their trade is changing, the structure of their economic growth is changing, and it's much more targeted in supporting growth in steel-intensive infrastructure, for instance. So as the urbanization rate starts to increase towards a sort of global developed economy level around about 70 to 80%, then we're expecting the government not to put in kind of widespread stimulus that can have a kind of very broad brushed effect on steel intensive growth. Is to be much more targeted and therefore to have a much smaller effect in the future. It's going to be targeted towards different elements of the economy rather than steel intensive construction growth.
So it's not going to potentially have that kind of impact that we've seen in the past with these kind of stimulus measures. And I think I can't sort of not ask about the whole sort of Trump factor, tariffs, and the general sort of continued global geopolitical instability. How is that likely to impact the dry bulk shipping market in 2025?
Yes, certainly tariffs have had an impact in the past, and as Adam mentioned, that's something that we've got some precedent to talk through. The issue is not necessarily with US imports, so the US is not a big driver of dry bulk imports. It's really about the potential retaliatory tariffs by its trading partners. In the past, the route most significantly impacted was soybeans trade into China as China pulled back from importing soybeans from the US in response to those tariffs. Now, the issue is that when that happened last time, back in 2018, China had this widespread African swine fever. And so their demand for soybeans was low, and that helped to kind of offset this trade. So we saw far fewer imports by China, and we saw some trade diverted from the US into Brazil and then Brazilian exports into China. So there are some kind of secondary factors, but the fact is that this time round, we don't think China will take such dramatic measures against US soybeans exports into China because they don't really have the same conditions as they had before. So the demand will be strong enough that they will probably continue to import soybeans from the US this time round. That's not to say that there might not be some short-term impact where ahead of any tariffs that Trump might be implementing, then trade does have some short-term boost. But overall, I think dry bulk market this time around is probably going to be more isolated from these effects.
Okay. So it's not really that bigger impact based on what you're saying there, or you're not expecting that bigger impact from that. I think just one last question. In terms of you, obviously, you could say there's quite a significant amount of new tonnage coming in. Do you expect owners to continue ordering new ships, or is that going to really put them off the current market, conditions?
Yeah, it's a really interesting question. That orders have certainly been quite strong in 24 and or supported by, I guess, a smaller number of larger owners ordering larger amounts of tonnage, if that makes sense. If next year we're right in that the market's going to soften, freight rates soften, then it does get quite difficult to justify ordering more tonnage in 2025. So that is likely to soften, we believe, in the dry bulk market. I think it's a comment that people have made that the dry bulk market is a good place to invest because the order book is so small, and it's around just over 10% of the fleet. And historically, that's been the case, that around about 10% would be seen as a low size of order book. But if we expect trade growth and demand growth to slow, then actually it doesn't seem to be too small in a world where demand growth starts to fall or starts to go from what has been 10% down to 5% now, 2% growth, then the order book does need to shift lower in response. I mean, overall, it certainly is relatively positive to the market to have an order book of that size. It's not a big threat, shall I put it that way? But it's also quite front-loaded. So, as I mentioned, it's going to have an effect on the market. 2025 is going to have an effect on the market. And in longer-term future, then if there is low ordering in 2025, then perhaps it sets the foundations for some market recovery or prevents a long-term collapse in the dry bulk market. but it's still, I would say, I would no longer call it a low order book. I'd say it's probably something that is more in line with what the demand outlook should require.
Okay, that's very interesting, and I think that whole demand and supply equation is very, very important as you head forward, and it'll be interesting to see how this plays out during the rest of 2025. Thank you, Will. If you've enjoyed this episode of the Seatrade Maritime Podcast, make sure to subscribe on the app of your choice, and we look forward to joining you on the next episode.